welcome to another Market Matters weekly video. The month of May ended earlier this week. Monday was the last day of May. We're going to chat about performance, how the portfolios went in the month. ASX was up just shy of 2% in the period. Let's kick off with the flagship growth portfolio. How'd we do?
So we were talking at the start of the month about the selling May go away thematic. We're putting a little bit more flexibility in the portfolios, taking some of the profits off the top, increasing cash. We thought there'd be a deeper pullback in May. There was at the start of May. So from the early period in May to the 20th of May, which was the low point in the month, the ASX was down 3.5%. Then we saw a pretty strong recovery thereafter. So if I look at the flagship growth portfolio, that increased 2.17% during the period. So outperformed the market marginally, but bear in mind that we had a higher cash balance throughout the period as well, which afforded us some flexibility if the market did have that typical May sell-off in May that sort of played out, but sort of didn't. We had some good positions in the portfolio. We manufactured some reasonable gains out of positions that we were down on. Whitehaven Coal was an example of that. And we added a couple of new positions in the portfolio. Car sales was taken during the period. Hub24 has done reasonably well after trading so-and-so for the first time when we bought it. So look, it was pretty reasonable performance. Nothing significant, Harry, but it's a reasonable performance outcome for that flagship growth portfolio.
Certainly was. The income portfolio was up a little bit as well. That one's meant to be a little bit more stable, but that also went to a pretty handy cash balance. Pretty happy that they managed to finish up in the month of May despite having a higher cash balance for the most part.
Yeah, so when you think about performance, you've got to think about sort of the portfolio composition and the risk you're taking on to achieve that performance. So it's always got to be anchored to that, the level of exposure in the market, the level of risk you've got if you get things wrong. So this portfolio is all about delivering consistency in returns, consistency in income. So throughout the month we had around a 25% allocation to hybrids, bonds, etc., more defensive things. We had a 14% allocation to cash. So you think about that portfolio construct, you're sort of 40% in really defensive type securities. The rest is exposed to Aussie equities. Overall, the portfolio returned just above 2% for the month. So if I stand back and think about that return, it's probably the one I'm most pleased about, given the level of exposure in the market and the level of risk we've taken on to achieve those returns. So, yeah, good one for the income portfolio this month, Harry.
Looking overseas, international and the ETF portfolio, the currency didn't have a big impact on those ones, but they also went to a bit of more cash. But one finished up, one finished down. What do we do there?
Yeah, so the international equities portfolio had a pretty tough month. It was down nearly 4% over the period. That was well underneath the benchmark that we need to be adhering to. Inception to date, we're still up sort of 20% per annum for that portfolio, well outpacing our targeted levels. There was a few things that came into play in that portfolio. We obviously had a pullback in resources throughout the period, so that weighed there. We also had some weakness in a couple of the large cap tech positions. The Trade Desk, which has been our best performing stock in that portfolio since inception, that had a really significant drop over the period, so that is now recovering. So look, a weak month from a portfolio perspective, from the national equities portfolio perspective. I look longer term, we're okay. We've had a really good start to June so far. So in the last week, that portfolio is up 1.85%. So we're still holding a reasonable amount of cash, looking for opportunities in that portfolio, Harry. So not a great effort, but it's been, it's picking up in the last week, which is encouraging.
Certainly. A similar thing can be said about the emerging companies portfolio. That had a tough May, mostly due to one position being EML that covered off more than 0.5% of that portfolio's losses there. That's also got a high cash balance. We're looking to add to positions there and looking to add to and some weaker sectors there. We had a look at McGrath this morning in the AM report. Elsewhere, how are we looking at that portfolio?
So the emerging companies was down more than 4% for the month. Obviously not a great outcome. It was giving back some of the gains or the strong gains we made in April. So, subscribers, and I've said this a number of times before, just around expecting greater volatility in this emerging company, smaller companies portfolio that we're running. So that's, we need to expect that. We're still running reasonable amounts of cash. We added a few positions during the month, as you know, obviously gone into the uranium sector through paying up for a position in Paladin, which we'll add to over time. So we've got that, EML was really kicked us in the teeth during the month. That was a position that was showing some really strong profits. It's now around about break even, but it's taken a fair amount of performance from the portfolio that month. And I'll just touch on the ETF portfolio, which I brushed over talking about the international equities portfolio. So that portfolio was up during the month. It was up from memory 0.7% or 0.68%. We took a really defensive stance in that portfolio. So that is designed to be non-correlated with the underlying market. So we hold things, commodity ETFs. We're short the market. We're long the volatility. We're long volatility at the moment. So that's a really defensively set portfolio designed to offer an alternative to, it's an alternative asset portfolio. So look, that was a reasonable month in that. That's actually had a reasonable week as well this week. So, if volatility kicks, if the market pulls back, that portfolio is going to be really well. It's sort of your anchor, if you like. So, if the market falls apart in the next couple of weeks, we'll be talking about that portfolio doing pretty well. So if I'm summing up, Harry, a reasonable month for performance. We didn't shoot the lights out, but a solid month pretty much across all the portfolios. A little bit disappointing in the emerging markets and a little bit disappointing in terms of the overseas equities.
Plenty more work to do, but look out for more reports to come.